No mai haere mai, ma loilele. Welcome to 3 News. It's the best news your wallet's heard in more than 3 years. The inflation rate has dropped to 2.2%, down from 3.3% in the June quarter. It means inflation is now within the Reserve Bank's target band of between 1 and 3% for the first time since March 2021. So prices are still rising in New Zealand, but the rate at which they're going up is slowly, helped by lower prices for domestic air travel, petrol and your veggies, but those were offset by the rising cost of rent, insurance and council rates. Here's Zane Small with the latest.
Festive tunes are in the air at the Lorna Jane store in Auckland's Dressmart shopping centre, and Tessa Veltman is on a mission to sell activewear.
Are we hunting for anything?
No, I'm just looking.
It's not the easiest task after years of inflation eating into customers' wallets.
The biggest thing that we've seen change in consumer habits is that people are wanting to buy things that they need instead of things that they want.
But today's Consumer Price Index update provided a bit of optimism. Annual inflation is at 2.2%. That's down from 3.3% in the previous June quarter. It means prices are still rising, but not as much as before.
I can see that people want to buy more. There's absolutely more people interacting with the product, wanting to try things on.
Retail has been pretty weak, despite the tax cuts and despite the prospect of lower interest rates.
The past few years have been an economic journey of peaks and valleys. After COVID lockdowns, inflation spiked to a high of 7.3%. To bring it down, the Reserve Bank hiked up interest rates to reduce the spending power of homeowners. It worked, demand dried up and inflation started going down. Thus, the Reserve Bank felt confident enough to begin cutting interest rates. Lower interest rates aren't felt immediately because homeowners still need to refix. But the good news is right now, roughly half of New Zealand's mortgage lending is on a period of no more than 6 months. That means the impact of rates cuts will flow through to households faster than might typically be the case.
That's great news for New Zealanders. It means that the groceries are cheaper, it means that interest rates are lower, and it most importantly means that they've got more money in their back pockets.
It's really encouraging to see a lot of pricing pressures are coming off. However, there are a number of influences out there that make it very difficult to discern what the underlying direction is for pricing pressure.
He was referring to government policies that affected today's inflation rate. For example, the Family Boost subsidy led to a 22.8% reduction in the cost of early childhood education, while the reintroduction of $5 prescription fees led to a 17.3% rise in pharmaceutical costs. Domestic inflation is sticky at 4.9%, and the downside to the Reserve Bank's engineered recession has been a rise in unemployment.
We're expecting unemployment to keep rising, and domestic demand was very weak, and as a consequence, that means probably tens of thousands more New Zealanders being out of work.
But with price inflation at least trending in the right direction ahead of the festive season, Tessa has one Christmas wish.
Come shopping.
And before you bring your wallet out of hiding, there is some news to counteract that easing of inflation. ACC levies could be on the rise after the Crown entity announced a deficit of $7.2 billion this afternoon. So Zane, what more can you tell us?
Yes, our state insurer said today that it was largely driven by an $8.7 billion increase in the expected future costs of injury claims on its books. And that's in part due to court cases that have made it expand the sorts of injuries and treatments that ACC has to cover. It also blamed the rising cost of providing services. It said compensation to injured people increased by 16% over the year, with the struggling health system hampering efforts to actually get people rehabilitated. Now, last month, ACC proposed to increase levies to cover future injury costs, and it's currently consulting on those proposed changes. But considering that massive deficit that it announced today, it seems pretty likely that levies are going to go up.
Zane Small, thanks so much for the update.